What is up, YouTube? Hey, what's up, guys? Mike the CPA here, and we are back for a very special video. Thank you so much for coming back and checking out Money in Life TV. We are glad to have you here, especially my sidekick Chipper.
Who summoned me? What is it?
Because in today's video, we're going to be talking about the very best performing Vanguard ETFs of 2018. These are the best performing ETFs through May of this year, and I am excited to share them with you. I've got a couple ones I've shared with you before in previous videos, but also some new ones as well. And these are the Rockstars. I don't know if you guys knew that Vanguard has some Rockstars, but these are the Rockstar ETFs for Vanguard of 2018, and we're talking about that right now. And as always, guys, the spreadsheet you're going to see in this video is completely free. That's right, your favorite four-letter F word, mine as well. It's completely free for you to download. I'm going to link it up in the description section of this video, so make sure to download it for yourself, and you can review the data at any time you'd like. All right, guys, this is how this is going to work, and especially if you're new to this channel, welcome. What I like to do in these videos, if you have not seen my previous Vanguard videos, is I'm going to go over each fund one by one. Then we're going to look at the stock holdings, all four of them. There's four in total that we're going to compare against each other, so we can understand what these ETFs own. And then in the last part, we're going to actually look at the comparison. We're going to compare all four together. If you've seen my Vanguard videos before, well, thank you for watching and thank you for tuning back in. I've made a few tweaks to the spreadsheet you're going to see later on in the video, so make sure to stick around and check it out. Let me know if you like the new format, especially in the way we compare them, and I got some new data here for you guys. So the first one we're talking about is VCR. No, not the VCR that you stick the movie into. No, this is the Vanguard Consumer Discretionary ETF. So this is, of the top four performing of 18, this is the first one. Now, date of research for all of these guys is 5/8 of 18. So we're a little bit into the month of May. And as you guys know, the performance of these investments can change throughout the year, but I would highly bet that at least one of these, if not more of these, will still probably be the top performing of 2018 for Vanguard, in my opinion. So, but we'll have to see as the year progresses. VCR, this Consumer Discretionary ETF. So what's got it? So the yield in these things, guys, is very small because these are really like growth type of ETFs. And so you're not going to see much of a dividend yield from these things, but growth is what you're going to get. So if you're looking for growth, these are ETFs that I would recommend checking out on your own time and doing your own research on. One of the new items I've dropped in on each tab of these spreadsheets, guys, is the beta for each of these ETFs. That's right, just like a stock, an ETF has a beta as well. If you do not know what beta is, you're looking at me, you're like, what the heck is that? Don't worry, especially if you're new to investing. I'm going to link up a description or link to what beta is down below in the description section below this video, so you can read that in your own time to get a better understanding of it. Okay, so year-to-date return is 4.7% so far. So we're about 5 months in, or about a little bit over 4 months have passed, and this thing has around a 5% rate of return. This has been in existence for 14 years. I've included the product summary. Not going to read this to you guys. So you guys can obviously read this in your own time because I want to get through this video pretty quickly. So let's go down the pipeline here. So currently this one, VCR, it's running at about $163 a share right now for each share of this ETF. So if you want to get in, that's what your initial buying price is around right now, as of the time of this video. Now, these are the average annual returns. Notice this is through the month of March 31st. And as you can see here, for 1 year, for one whole year from May to May, it's gone up about 16%. 3 years, we're looking at about 10 or 11%. 5 years, about 15%. 10 years is about 14%. So what this basically means, guys, is that you're getting these average returns every single year. So since inception, and this thing has been around since 2004, obviously, as you guys can read that, and it's got about a 10% rate of return every single year. And in the past year, it's been stellar. Of course, last year, the stock market went way up, and it's been great. Okay, moving down the line here. Let's see what this thing owns. The top 10 holdings. Now, how can you go wrong with the top 5 lineup of this? So you're looking at, in the first 5 stocks, you're looking at Amazon. What person does not want to own Amazon? I know I own Amazon individually in my portfolio. It's my best performing stock. Home Depot, homedepot.com. We all need to be able to renovate our homes, fix up our homes, and it's pretty hard to shop for that stuff online. So I like the fact that it hosts Home Depot, and I wish I personally still owned Home Depot, but I don't. So maybe I should be buying this ETF. And then it owns Comcast. That's the next one. And then it owns Disney. And as you can see, Incredibles 2 is coming out. So it owns Disney. And Netflix. Netflix is one of the best stocks of this entire year. I think year to date, Netflix individually as a stock is already up over 60% the last time I checked. But check my numbers. So it owns some pretty stellar stocks. Let's go back to the sheet. And as you guys can see here, you can read down the list. Now, one of the things I've done differently, and notice these 10 stocks represent 50% of the assets within this ETF. So it's pretty heavily weighted in these 10 investments. It owns a total of 367 stocks, and I've listed the top. Normally I would list the top 100 holdings, but going forward, I'm just going to list the top 50, and you can read them all right here. It owns a bunch of large corporate blue chip type of stocks, which I really, really like. Okay, so that's VCR. Let's move on to MGK. MGK. So this is the next rock star of this ETF. And this, I've actually talked about MGK in a previous video. You guys might have seen my Vanguard Growth Fund video. It's on the 4 Vanguard Growth ETFs that are specifically designed for growth. There's 2 domestic growth funds that are for the US, and there's 2 international growth funds as well. So if you haven't seen that video, here's the thumbnail for it, but I can link it up down below, and you guys can go check that out. And it talks about the Vanguard's funds that are specifically designed for growth. All right, MGK was one of my favorite in that video, and like I said, the yield on these things, guys, it's very small. And just so you guys know, the fees, I don't have the fees listed right here. I guess you can see it right here in the summary. See where it says expense ratio? It's 0.07%. And so your dividends are going to cover the fees, which I love that. I love that. So this is the beta. It's a little bit more volatile at 1.1. Not extremely volatile though. It has year-to-date return of 5.14% currently, and years in existence is 11 years. So it hasn't been around as long as some of the other ones, but it's doing pretty well. It's one of Vanguard's very best ETFs in their entire lineup. All right, links. And I forgot to mention, guys, especially if you're new to this channel, on these Vanguard videos, this link right here, if you click it, it will take you right to the actual fund itself if you want to review the fund in detail. So see how it takes you right here? And this is where I got the majority of the information for this video. It's all coming directly from the horse's mouth, which is Vanguard. The horse is Vanguard. All right, let's go ahead and continue on. Let's move down here. What about rates of returns for these things? Because that's what people are really interested in. Okay, so in the past year, it's gotten about a 19% rate of return. In a 3-year period, it's got about a 12% rate of return. Let me zoom in a little bit so you guys can see better. 5 years, its average is about 15% over the last 5 years. 10 years return is around 11%. And since inception, 9.89%. So most of these are going to, since inception, average about that, 10%. However, the 1 year, the 3 year, the 5 year, that's all going to differ. So this is the MGK, and what the heck do they own? Now, back at the end of the year, you guys might have remembered if you've seen my Vanguard Growth ETF video, I kept this in here so you can kind of see that Vanguard regularly updates their index, or I should say how they allocate the money within this ETF. Because as you guys know, an index fund mirrors an index, right? An exchange traded fund such as this, but then it's up to that investment firm, which it's Vanguard in this case, that they decide how they're going to allocate that money within that index and of what stocks get the most weight. So in this case, as you can see, as of 12/31, some of these have changed. This is its number 1 holding, and Apple's been doing fantastic this year. In fact, if you guys pay attention to what's going on in Apple, they're actually using a lot of the new tax cuts from the Tax Cuts and Jobs Act, and they're repurchasing more of their shares. So their stock has really been going up quite significantly. And I own Apple individually, and it's been doing very well. Google. So when you see the word alphabet, that's Google. Okay, then I think there's 2 kinds of Google shares. There's Class A and Class B, basically. There might be more. I'm not an expert on it, but it owns Google, and of course it owns Facebook. You can't go wrong. I mean, Facebook has been doing great despite all the controversy. It's doing fine. And then Home Depot and stocks like that. So this is its current holdings over here, guys, as of 3/31/18. But you know these can always change. Okay, and these 10 stocks represent 40% of this growth fund ETF's assets. And I've listed the top 50 here. You can compare them. I've kept this in here since I already had the data. You can compare how their stocks, and they own about 130 stocks total. You can compare what's changed since December to now, if you'd like to, if you really want to see what this thing owns. Okay, now let's go to VBK. VBK is our next one, guys. And VBK is Vanguard Small Cap Growth ETF. And another rockstar. We've been taught, or at least I've been taught, that if there's smaller companies, there's a larger chance they can grow and increase in value faster than the larger companies like blue chips, because they have a lot of room to grow. And so naturally, I would expect this one to outperform MGK as far as a growth fund is concerned. And it does. And so far, year to date, it has been. So yield is less than 1% on the dividend, very small dividend, but it's going to pay for your investment fees on this. Beta is 1, exactly 1. So it's not extremely volatile, which I like. At least in my opinion, year to date return, it's already got a 6.39% rate of return as of the making of this video, and been around for 14 years. So not bad. Let's go down here. Here's the overview. And average annual performance. Here we are. This is what you guys want to see, as you've told me over time. Show us the returns on these things. Okay, 1 year, we're looking at 17.39%. 3 years, about 8%. 5 years, 11.5%. 10 years, 11%. And since inception, about 9.37%. So all great returns on these things year over year. Because remember, guys, this is the average annual performance. And so every year, like over the last 10 years, you're getting at about an 11% rate of return every single year, which is like 10 times or 11 times what the bank will pay you. So it makes a significant difference over time. And you building your wealth, and you and I building our wealth, if we can get higher rates of return every single year and have our money outpacing inflation, is very, very important. And so I would feel pretty comfortable parking a large amount of money over time rather than putting a lot of my money in a savings account. I feel like any of these might be a good investment alternative to grow your money quicker, but not worry too much about losing the money either. Just like this is one of the other funds that was in my Vanguard Growth ETF, and I've kept what was in there in December, and here's what's in here now as of 3/31/18. So it owns, now these are smaller companies, so some of you might recognize the name, some of you might not. And so I dug a little bit into it. So Copart Inc., I was like, what is that? It's actually an online salvage leader in auto and insurance. Then it has TransUnion, which is, you guys know, is the credit reporting agency. Then we have the Old Dominion Freight Line Inc. So I'm like, what is Copart? Copart's pretty cool. So this, if I can find it, here's the Copart's website, guys. So this is the company's website itself, and it sells thousands and thousands of auto parts and sells vehicles as well. So it's pretty cool what they do. And this TransUnion, they're the ones saying check your credit score for free. That's what they do. Check your credit score, folks. And then the Old Dominion Freight Line Company. Well, here it is. They are a shipping company that ships things around the globe. So pretty cool. I always find it fascinating to learn about some of these companies, especially the smaller ones, because there's a lot going on out there that we just don't know about, or at least I feel like I don't know about. So I'm always learning something every time I make one of these videos. All right, moving on. So here's the top 50 holdings, just like I promised you guys on all of these. Oh, I almost forgot to mention, how many stocks does this thing own? Apparently the fund manager, whoever decides how many investments to choose in this fund, really likes the number of the beast.
Not even death can save you from me.
Scary. Okay, moving on. Let's go to the best one. So the best performing Vanguard ETF of this year, the very best, VGT. And man, do I wish I knew about this one earlier on, but I just discovered it recently. VGT, Vanguard Information Technology Fund. Beta is a little bit higher than 1%, or 1 I mean. Year-to-date return, it's already at a 10% rate of return year-to-date, and we're only in May. In a one-year period, this thing has produced a 27.5% rate of return. Holy After 3 years, it has averaged about 18 to 19% per year. After 5 years, 20% rate of return on average return. After 5 years, a 20% rate of return. 10-year average of 14%, and since inception about 10%. So from the last 5 years, this thing has averaged about 20% per year. Nice. Very nice. Okay, so what kind of companies does this beast own? Let's take a look. All right, its number one holding is Apple, then Google, followed by Facebook, followed by Intel, followed by the number one job replacing machine, the creators of artificial intelligence, Bitcoin mining champion, NVIDIA. Oh my goodness, and it even owns things like Visa. And what in the hell is wrong with that guy? He is way too excited to be going into debt. He must be buying something really, really enjoyable. All right, guys, and of the top 10 holdings, 55% of their portfolio is weighted in these 10 investments. So they're very heavily weighted in technology, just like their name implies. All right, now let's go over to the part of the video where we compare all the stocks against each other. So let's look at the stock holdings real quick, guys. All right, this is the part of the video where we compare the top 50 stock holdings against each ETF that we've shown in this video. And wherever there's green, that means that the other funds owned it as well. So as you can see, these stocks in green, Amazon is very popular, Apple's very popular, Facebook's very popular, Google, many of them own the exact same stocks, especially these three, MGK, VCR, and VGT. However, notice that VBK, hardly anything is similar. Why is that? Because they own very small companies, whereas these guys own very large companies. So that's why VBK does not have any duplicates right here. But yeah, I mean, when I look at ETFs, if you're, just a quick tip, if you're trying to figure out, well, if you want to buy individual stocks, well, this is a pretty simple way to kind of see what stocks do very well. And the fact that Vanguard, one of the largest investing institutions in the world, has these stocks in multiple versions of their different ETFs gives you a pretty clear indication of what stocks might be good to buy individually. So just something to consider. Not saying to do that, but just something to think about. All right, and last but not least, we are going to compare these rock stars to each other. Okay guys, now let's go over to the final part of the spreadsheet. My favorite part is where we compare all four of these funds against each other. Let's go take a look right now. So I've changed the format a little bit. I was able to fit all of them on one tab so that we can compare all of them on screen. And I've listed them all right here, and I've listed the average annual return of each one so that you can see them all on one screen all together. And you can see the yield, the beta, etc. It's all there for you. And as you can see, year to date, it's very clear that VBK and VGT are the leaders so far year to date. However, over a 10-year period though, guys, definitely VGT and MGK are fantastic stocks, are fantastic ETFs, I mean. Now, you just have to remember, MGK in the long run might eventually overtake VGT. We'll have to wait and see. This has been around, MGK has been around for 11 years, where VGT has been around for 14 years. But solid ETFs. I would expect any one of these by the end of this year to be the best performing Vanguard ETF of this year. If I was going to put my money on it, which two would probably do that, I'm going to guess it's going to be VGT or MGK. So we'll see how this smaller growth one does throughout the year. But my main choice would probably be VGT if you're looking for solid growth. I mean, guys, it owns fantastic companies. I don't see Apple going anywhere. You know, Visa, NVIDIA, these are companies, in my opinion, that are here to stay. Microsoft, it owns fantastic companies. Those companies, for the most part, have been reporting fantastic earnings, and they provide some of the most stable, solid growth year after year after year. if it works within your portfolio. Now, always remember, you have to consider risk. What type, your age, how much risk you're willing to take. Can you afford to invest this money? Can you afford to lose it? Now, what I've done just down here is I've from Yahoo Finance, I've pulled the graphs so that you can see the different graphs charted out on screen, so that you don't even have to go to Yahoo Finance to do this. I've done it for you guys. Here's the 5-year comparison. As you can see, VCR has done pretty well over the last 5 years. And so it's the gray line is VGT, VCR is the blue line, and MGK is the red line, and of course purple is VBK. So I've color coordinated it with the color of the tabs down here, so it's easy to see. And here's the 5 years, the max comparison. So the max comparison would be like 11 to 14 years in this case, because I think 14 years is the longest these ETFs have been around. Now, notice VGT is at 309% return. So if you would have been fortunate enough to start investing in VGT back then, you would have tripled your money. Tripled whatever you put into it. So 10,000 would be 30,000, 100,000 would be 300,000. You guys get the idea. But look at all the other ones. You would have easily made your money 2.5 times what it was had you known about these back then. But as far as I know, I think these things have a bright future. And look at over a 2-year period, guys. VGT has averaged or has gotten about a 74% rate of return.
Dominating!
It's pretty insane. So it's doing fantastic. All right, guys, I hope you really enjoyed this video. I hope you got something out of it. Remember, this spreadsheet's free to download, so make sure to download it. I'm gonna put a Dropbox link in the description section down below, or you can look on my website, moneyandlifetv.com, and you can find it there as well. If you're new to this channel, I just wanna say welcome. Thanks for sticking through me with this video, and I hope you guys got some out of this. If you wanna see more videos like this, let me know by hitting the like button. Make sure you hit that like button. And I love to hear from you guys in the comment section, so please drop a comment before you leave. It'd be great to hear from you. Let me know what investment you would be thinking about investing in of these 4. Which one do you think you would go with and why? I would love to hear from you guys, so let me know in the comment section down below. Make sure you subscribe to my videos so that you do not miss any of my future investing videos. I'll be doing videos in the future about more Vanguard funds, Fidelity funds, individual stocks and things like that as the year progresses. And as you guys know, one of the main pillars of this channel is also about taxes, because I'm a CPA in real life. I've been doing taxes for 7 years, and I've been investing for about 4 years, so in the markets consistently every single year. So make sure you follow my videos by hitting that subscribe button. All right, guys, I really hope you got something out of this video. I hope that took away some of the confusion of what ETFs to be looking at in Vanguard, which ones are doing well. I've done the research, it's right here for you. We'll see how the year progresses if these 4 stay on top for the rest of the year. I'm really curious to find out, but we will know by the end of this year, and I'll probably do a video on that to see how it all panned out in the end. So if I can make any improvements to the spreadsheet, guys, let me know. But I love you. Thank you for taking time out of your day to spend time with me here on YouTube. I always appreciate it. And I gotta run, but I hope you have a wonderful day and a wonderful weekend, no matter where you're at. All right, peace, guys.
Because we all just wanna be big rock stars and live in hilltop bosses driving 15 cars. The girls come easy and the drugs come cheap. Well, I'll stay skinny 'cause we just won't eat, and we'll hang out.